learn how to build wealth like a billionaire. We have guest expert Lynn Kitchen here today, and she helps empower you to achieve your financial goals. And Lynn, I am so excited to have you on the show today. Big welcome.
Thank you so much, Kelly. It's a great honor to be here.
It is so awesome to have you here. And so many times we have conversations about building and growing our businesses, but we also need to make sure that we're paying attention to our investments, to our wealth building strategies outside of the business, the ways that we're using the work that we're doing in our businesses to make sure that we have security and a long-term plan outside the business. So I'm so happy to have you here today for this conversation. Why don't you start by just giving a little bit of your background and expertise so people understand the kind of the context for how you began doing this work and what you do to help people to build and grow their wealth today.
Well, thank you for that. Thank you so much. I have a almost 50-year history, really, a love affair with the stock market, bond market, investing in general. I jumped into the investment world right out of college at a time when women were not allowed to be stockbrokers unless you had at least 10 years of experience as a secretary or a back office professional supporting a stockbroker. But I felt I had sales experience. I had put myself through college, sold books door to door, programmed school to school, advertising store to store. And I convinced my manager, my newest manager, that I could sell. And that, after all, is what a stockbroker does. So I got in. This was back in 1976. I spent my first 30 years in the investment world going from stockbroker. Early on, I was the first woman to open my own broker dealership out on the West Coast in Los Angeles. It was a huge, big leap. Nobody thought I would ever make it. That was in the early 1980s. I built that company, I sold it, and then I went to work with two other wonderful gentlemen. We built up a second company. This one was an investment advisory broker dealership. And then we built that over 15, 20 years and sold it about 5 years ago. I had retired in the meantime in 2010 after 2 bouts of cancer. And that was a strategic move. But you know what? I got bored. I was trying new things. I became a television producer, did a lot of fun things. But there was a voice inside me that said, are you going to die with all that knowledge left in you? And I thought about, well, what could I do with basically 35 years of a professional background in the investment world at the level of an executive? And I determined that I could give back. And so this is what I'm doing now. I have an opportunity to give back. I have a financial clinic, which is education oriented. I have a market sense, which is behind me, which is all about sharing what I believe is going on in the market. It's much more of a hands-on, ear to the ground, what's happening now since our markets are shifting so quickly. But I do believe one thing, like you do, Kelly, wealth building is a conscious effort.
Yes.
It's a long-term effort, and it's an important one that each one of us take personal responsibility.
It is so true. And I believe that so much. And, first of all, you're just such a star. And I'm so honored to have you here. And like your story is just incredible. You're a trailblazer, disruptor, innovator, leader on so many levels. But to your point, Madison is homeschooling with me for the first time this year, me and my husband jointly. And one of the commitments that I made is every week, part of my homeschooling with her is we're going through an investing class, and I sit and I do the classes with her. She takes the quiz at the end of each. We're building her stock portfolio, and she is learning at 10 the importance of investing and being a steward of wealth and understanding these things, which I did not learn until much, 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 much later. Many of the things I'm learning with her, I'm learning too. So it's just so incredibly important, the work that you're doing, Lynn. And it's crazy because even people who have had high levels of success, that doesn't mean that they were exposed to this knowledge that you're sharing, these principles and these strategies. So I know you were so kind and you said that today you would be willing to share kind of maybe 5 of the top principles that you have been teaching recently to people, given the market of today, how to be thinking about their wealth. I know everyone always has a question, what do we think the market's going to do this year? How should I be building? How should I be planning? So I'm very interested in your perspectives on what you're teaching currently in your classes and what you're bringing to the investment world.
Well, I am happy to answer that. And I actually have prepared a gift for your audience that will gift them so that they can download a document with really these 5 points. And I'm going to go through these 5 points, which I think are strategically important here in the first part of 2025 to get ready for what we're in for. But before I do that, I just want to say what a wonderful advantage that your daughter has to have parents like you that will take the time and personally sit down to teach. I mean, where have we ever had the opportunity to really learn about financial management, concept of money? I think most of us have irresponsible and irrational viewpoint about money and what money can do for us, what it can't do for us, and all kinds of unrealistic expectations. Why? Where did we get that any kind of knowledge or education? It's not really our fault. Where can you learn it? We did not learn it in school. You mentioned homeschooling, so you are making a total disruptive and innovative way to take responsibility for your future generation. Good for you.
Yeah,
That's
we
what
need
it's going
it.
to
I
take.
mean, it's crazy to me that we will go our whole lives. And, Warren Buffett says compound interest is the eighth wonder of the world.
Yeah,
And that's something that we can and should have working for us our entire lives. But most of us don't know anything about money. And so we don't, we could have been investing 20, 30 years ago. And so many people also abdicate their power and they say, oh, I'll work with just a financial planner, but they never actually take the time to learn and understand the principles that you're putting in people's hands so
right.
that they can be making good decisions for their financial future. So I'm really excited to get into this. I can't wait to hear what you have to share. And I'm sure I'm going to have lots of questions, but go ahead and dive in, Lynn. I'd love to hear the top points that you brought to share today.
Oh, excellent. Well, first of all, I just last week did a 3 hour masterclass, and it really was in the style of what I have learned from Kelly on how to do a live launch. But this particular 3 hour masterclass was a hybrid of, really a teaching opportunity as well as a live launch.
Mm-hmm.
And those of you who are working with Kelly would understand exactly what I'm talking about. But I'm so proud to be able to say to you that everyone came away from that with a new understanding of what they need to do
Mm-hmm.
to get ready for this year. So really, it's truly a question that I have for everyone listening. Are you ready to take your wealth from wherever it is now to 6 figures, 7 figures, 8 figures, and beyond? Are you ready? And what that is going to take is a complete financial thinking revolution inside yourself now going forward. Why? Because we are now living through a financial revolution. It is AI-driven advancements, global economic shifts, and I believe that we are really going through a tectonic plate economic eruption, which will be so fast and furious moving forward that many of us, even who've been professionals in this industry for a long time, will need to recalculate how we value assets going forward.
Mm-hmm.
What that means to each individual is that we need to spend some time redefining how we feel about our wealth and how we want to create our wealth. So the first thing, of course, is mindset, right?
Always.
Always mindset.
Always.
The second thing really is skill set. And it now more than ever, I believe that it's going to require 3 new things. One, get a lot smarter.
Mm-hmm.
We need to make the decision
Mm-hmm.
to get a lot smarter. Now, many of us have opportunities to get smarter. I'm providing some opportunities for those of you who would love to learn more, know more. I try to do it in a way that makes the complex simple. But we need to get smarter. Number two, we need a plan that we can follow. How many of you have a plan that is not somebody else's plan or a big, thick piece of 4-inch lump of paper that you don't look at anyway, you don't follow it, and practically don't understand what it says, how to get from point A to point B. And then number three, I believe, need a smart mentor, somebody who's been in the trenches, who has the experience. It's important for us to find people on our team, to create a team around us. Now, many people have really smart CPAs, right? You can have a very smart long-term asset attorney for your long-term wealth. But how many of us have someone in our corner that is a tried and true investment advisor? Many of my clients already have investment advisors, and yet they don't even know what the investment advisor is talking about half the time.
Mm-hmm. Yeah, it's so true.
So what I believe is important is to have potentially someone on your side who can be a concierge approach, take a look at all of the team members that you have pulled together, look from the longer term perspective. Where are you going with what you do have? And here's 5 key takeaways, if it's okay, Kelly, for me to give the 5 key takeaways that I taught last week.
Absolutely.
Okay, first of all, as it relates to mindset, I think that wealth building is going to require strategic thinking, not emotional thinking. I mean, it's hard not to be an emotional creature. We all are. But to learn how to objectify our own emotions and become much more of a strategic thinker, that takes education, and it takes a little bit of time and commitment on each one of our parts to say, you know what, I want to know what's going on, and I want to be able to not react, but rather respond in an intelligent way. So I do think, that book we all know and love, Think and Grow Rich, I believe this is going to require a different type of thinking, strategic thinking going forward. And then to learn how to anticipate market shifts, we're going to need to get a little bit better at a forward anticipation so that we're not always late and reacting to very, very fast changing markets. Number two, protection. I think protection of our wealth is going to be tantamount now more than ever. We're moving into an inflationary, potentially highly volatile market where even inflation can move up, down, and it's very hard for us as individual investors to really know where we are in that trajectory. But as we do move forward, we do know this, as I think, who was it, Benjamin Franklin said, it's not what you make, it's what you keep that counts. And so what is it in between the what you make and the what you keep? It's inflation. So inflation is going to be probably the number one bugaboo that will eat up the buying power of our wealth in the next 30, 40 years. For that, we need to be a little bit more proactive and learn what we can do to protect ourselves.
Mm-hmm.
Number three, it is the end, in my opinion, this is the end of passive investing. Mm-hmm. What do I mean by that? I mean, we've all been kind of made to feel numbed out a bit, that we can rely on AI-driven, automated investment advisors to just automatically asset allocate our investments, or it's easy for us to just put our portfolios into the hands of a professional and think that we're safe. He's taking care of me. She's taking care of me. No more. It's time for us to be active. Passive investing is no longer going to cut it. And it really does come back to me as a CEO. I want to make sure that I understand the trajectory of my wealth, my future, because really it all comes down to the values that I hold dear in my heart. Mm-hmm. And I'm building for those values, the impact that I want to have on the world And that means hands-on, hands-on. So moving away from passivity to activity. So I would say that's number 3. Number 4 is how to spot market inflections. We have been through a 16-year cycle ever since 2008, right? Here it is, 2025. Ever since 2009, which really was the bottom of this cycle, till now, 16, 17-year, biggest, strongest bull market cycle than we've ever had. And boy, we can certainly look at ourselves and say, when we take a look at our portfolio, boy, aren't I smart? Aren't I smart?
Mm-hmm.
Actually, I've been through so many tops in the markets, quick downdrafts. This market reminds me a lot of the year 2000, when the internet was first being born. And right after that, we had the dot-com bust, which was in the next 2 years. Very violent. I lived through the 1987 crash. Very violent. I had my own broker-dealer at that time. My clients lost 35 to 40% of their portfolios in 3 days. When the markets come down, they can come down a lot faster than you even know or are prepared for. Of course, I can say over time, thankfully, I was able to help them build all that back up. And then, of course, you can see what happened in the next 2 decades beyond extreme amount of wealth created. But one needs to get a little bit more attuned with these markets' ups and downs. I predict that we are moving into a new cycle of volatility, that the actual bull market has topped. Not that it's going to come straight down, but I do think it'll probably go in a sideways channel, up, down, up, down. So that's a very volatile, potentially moving forward, especially in this year, 2025.
Yeah.
So we need to be willing to do what it's going to take. That's called active management. Well, what's the first critical move when that kind of volatility is in place? Raising some cash, taking some risk off the table, moving into a little bit safer position. That doesn't mean to sell everything, but it does mean that on a person by person basis, now's the time to speak with your investment advisor, learn what you own. Learn what you own. See how much at risk you truly are. And then number 5 is the power of a personalized strategy. Because cookie cutter won't work anymore. It just won't. Billionaires and millionaires, they all tell us generic advice is just generic. You know, we don't want to put ourselves into an area of mediocrity anymore. So those are the 5 things that I see. A lot of volatility ahead, but there are ways to mitigate the risk. And certainly it's time to make sure that if you don't feel confident, make sure you find someone that you can work with, that can help you and advocate for you, and be someone that you can ask questions of and feel confident that you'll receive objective advice.
I love this so much, Lynn, and I think it is so crucial. And it's funny because I wouldn't have articulated it in that way, but everything that you just described is why it's so important to me that Madison is learning this for herself. I don't want her abdicating her power, not to say that she doesn't get advice, guidance, support, mentorship, education, all of those things. But you said, just, you have the robo investor, you have the person that just manages your portfolio for you. You have no idea what's going on. You have no idea what you're invested in. You don't even know like what's going on in the markets. And you're just assuming that you just pick these trades. And you're saying people need to actually take the time to invest in expanding their awareness and their education, be hands-on, know what they're invested in, find someone that's actually going to give them a 50,000-foot view level of guidance, not just pick this, do that. We're going to do these trades, right? So I think this is so, so crucial. And I guess what I think can be so confusing is knowing how to pick a strategy during volatility, when you're trying to decide between, and of course, all of this is so dependent on people's runway and how long they have, right? And when they need the money, but trying to decide between capitalizing on instability versus pulling money off the table and knowing which strategy to pick, right? Because I agree with you. I mean, I think it's going to be wild stuff this year. I mean, even today, let's talk about today, the conversation we're having right now. China just released DeepSeek, right? And we saw NVIDIA went down 18% today already, and probably more to come. Like, how would you suggest that people start paying attention and interpreting these types of things, right?
Yes, this is important and crucial. To talk about the first idea of how do you handle volatility, it is going back to the concept of having a long-term plan.
Yeah.
Now, we all know that if in order to build wealth, you want to take your earnings and invest every extra penny that you have, but then those earnings have to be invested with an additional long-term plan. Mm-hmm. So this is the important thing. You want to have a portion of your portfolio allocated correctly for that long-term plan. Whether it is depending on your age group, obviously, and how much more long that you have to invest and to before you reach retirement or need the money for XYZ. And let's say the traditional 60-40 split, 60% in equity, 40% in bonds, maybe some other hedge investments like gold, whatever. But the thing is that is in place for the long run. You want to make sure you understand what you do own for that long run. Wouldn't it be great then to have a layer of additional capital that is for shorter term, taking advantage of these opportunities? So as I have been doing in my own portfolio up till now, I've been raising some cash to have cash on the sideline, knowing that a bull market will only stretch so long and so far until the next probability of the move is going to be down. So we're experiencing that today, just the first day of it.
Yep.
And most likely a good correction is in store for us. That would be healthy.
Yeah.
A healthy correction is something that I teach my investors to look forward to. Why? Because it's going to set up a sale. We can go shopping and get a sale, buy new securities, even higher quality companies at a lower price later. But you have to have the cash on the sideline in order to do that. If you're fully invested and up to here, you're forced to ride out these ups and downs. Not that you can't, you can. Because over time, if you have 30, 40, 50 years, fine. But
then you can't capitalize on the
you can capitalize
opportunities.
On opportunities if you have a strategic plan that allows for that.
Yeah, I love that. So I just want to recap a couple of things that I think were powerful about what you said there. So one, you said making sure that your portfolio is broken down into tiers of your long-term stability, that is your lowest risk, whatever. And then having your short term where you do have that opportunity to have a portion of the portfolio where you can allow for the volatility, you can capitalize on some opportunities, which I think I agree with you. My perspective, I think there's going to be a lot of opportunities, but the important asterisk to that you just said was you got to make sure you have cash on the sidelines. Yes. Because when the sale happens and things drop and you want to go buy all these other things, if you have to sell in order to buy, you're screwed, right? Because now you just lost all that money. But if you stack up the cash on the sidelines and you're in a ready to invest state, then as you see those things, you can jump on them. And I love that. I think that's great advice for everyone. What are some of the other things that
it's not just it's not just my advice. We're looking at true investment philosophy. Even the best billionaires now, Warren Buffett, worth 200 billion, not just a single billionaire, but he spent the last year building cash.
Yeah.
We can look at these people's actions and we can learn from that. He's been building cash up to $400 billion of cash in the sideline. Well, okay, that's wonderful. He's going to have a lot of fun when things go on sale.
He's getting ready. He's getting ready.
He's been ready. And that is why like that, I believe we must look for quality investments at a good price. That's how you build wealth over time.
Yeah. When you're looking at a stock and you're deciding whether or not you're going to get into a stock or you're looking whether or not you're going to expand your position in a stock, and you're looking and you're doing the analysis and you're looking at their performance, and you can see like, okay, this stock is down year over year from its high, so it's in a position where it's not at its high. But you could look at its 10-year run, you could look 5 years, a month, 6 months, a year. When you're doing that analysis with your clients or for yourself, Lynn, what is the time range that you're typically looking at to put this in context to say whether or not you feel like it's the right time to buy that particular stock based on its own history and performance and, what's happening and all of that? Like, what are you considering when you're making that decision?
Great question. I'm a specialist in chart analysis.
I didn't even know. See, we're on the same page. I didn't even know that, but that
Yes.
was the question I had.
Of course, there's the fundamentals first, which has to do with the earnings and how strongly the cash flow is moving in to support the underlying price.
Yeah.
If you don't have that, then who cares about the charts?
Yeah.
But if all of that is in place, then you look to the charts, and there I look at both the short-term, medium-term, and long-term charts. And I look at least 5 different kinds of charts. I actually happen to be an expert in something called the point and figure charts. A chart usually gives a price action over time, right? So that you can see almost like a visual display of the price action over time. Those are traditional charts. I always look at a long-term chart, 20 years minimum. But you can go back to 50 years. You can go back to 100 years if a stock or has that kind of history. Of course, younger companies don't have that long history, but I do. I go as back as far as I am able to get the long-term view, 50,000-foot view. Then I start coming in closer to a 10-year chart, 5-year chart, 2-year chart, 1-year chart, 6 weeks, 1 week. And I'm always asking myself questions along the way about the price action and the volume that is supporting that. And then I move to other kinds of charts. There's so many different kinds of charts that will give you a different perspective. One I just mentioned is called the point and figure chart, which squeezes out the time and you only look at the price. It's a magical way of looking at things. It gives me a different perspective, and then I can understand, is this a real buy point or is it a fake? Is it a fake out?
Interesting. Okay. That's very interesting.
There's a lot of skill set that goes into that. That's why I say this is a huge field, of course. There's a lot to learn, and it can be fun and it can be rewarding. You don't have to become an expert, but a little bit of knowledge does go a long way. And for you to take responsibility for your money the way it is invested, I find most people make the most mistakes by not really understanding what they buy or what is sold to them. Oftentimes they'll end up with a hodgepodge portfolio and they can't even remember who sold them what or what it's all about and why to begin with. So that's why as we move down the road as investors, we want to get the vision of our values. Values-based investing is what I'm all about. What do I value? What are my long-term core values? It might be education for your daughter. You want to make sure that that is in place and that has a time frame on it. And by the time she's 20, you can say, okay, that's going to be in the year, 2035 or whatever. And you're going to need $400,000 on that year. We can reverse engineer for those value milestones and create portfolios just for that. You can have a milestone of your retirement area and reverse engineer how much money that you are going to be needing to have that lifestyle that you will value. So values-based investing is the big picture. Then we move down into these more strategic aspects of investing.
Yeah, no, I love that. So when you think about this year, I feel like we could have like an 8-hour conversation. I have
I
so many
know,
questions. I'm
isn't
going to
it
bring you
true?
back on the show again, Lynn. I'm going to bring you back on again. But when you look at this year in particular, so you already shared a couple really important things, which was, making sure that you have cash on the sidelines that you're ready to invest. You shared that people should be prepared for some volatility this year. You
Right.
shared that people should be looking at the segmentation between their long-term stable aspect of their portfolio and the shorter term where they're going to give themselves some leeway to capitalize on some of the short-term things. What are the other things in this year in particular that you think people need to really be paying special attention to? Like when you're thinking about how you're going to be supporting your clients this year, what are some of the things that you think, knowing what you know about the volatility, about some of the opportunities, about some of the
Right.
challenges, what are some other things that you're really going to be keeping your eye on?
That's a great question. And I think that the second most important thing to keep our eye on is not necessarily the ups and downs and the squiggles, I call it, which of the market, because it can be insane making.
Yeah.
Um, you don't want to look hour by hour at your
Yeah.
stocks. You know,
Yeah. Yeah.
you do want to have enough perspective that you can have an unemotional response or a strategic understanding of the price shifts. But second to that, and even more importantly, what is it that is moving those prices? And
Mm-hmm.
there are two things to understand. One is the underlying earnings of a company. And the second thing is something a little bit more global, and that is interest rates. So the direction of interest rates this year is going to be critical and crucial. And unfortunately, rather a political football. And as we move into an era where these political ramifications are going to have a lot of emotional push pull on investors, on our viewpoints, attitudes, perspectives, I just want to help everyone to synthesize that down. If we can put all emotions aside, let's take a look at what is the cost of money? That's interest rates. Interest rates is nothing more than the current cost of money. We've had interest rates have been going down, and there's always a push-pull now. Does that mean that we're going to have continued interest rates down? If so, that's what this big bull market has been based on. But that's been in the past. It could change in the future where the interest rates have now could be bottomed out and might be in a long-term uptrend going forward for at least the next 3 to 5 years. It's hard to see out any further than that.
Yeah.
And if
Yeah.
that's the case, then it behooves us all to go back to our portfolios and recalibrate what I call your risk tolerance.
Mm-hmm. Mm-hmm. Yeah. Really good. Really good, Lynn. Oh my gosh. Fascinating. I want to keep this going all day. Okay. So what are the ways that you are working with people right now? If someone's listening to this show and they're like, okay, I need help. What are the ways that you're working with people today? How can people work with you? And then let's tell people where they can go to connect with you. And of course, for everyone listening, I will put that in the show notes down below, along with the guide that Lynn prepared for you and all of that. But could you just share quickly, Lynn, how they can work with you if they feel
Yes.
that they need help
Yeah.
in this area?
Absolutely. Well, thank you first, Kelly, for gifting your listeners. I'm going to be providing this link free to you with those 5 items that I taught last week. But at the bottom, there's going to be a little Calendly link. So if anyone would like a conversation with me, I would like to gift you my time, which is worth a lot to me. And so I'd like to gift it to you because I know you came by means of Kelly Roach. So I know it's going to be a significant conversation because the people who follow you are serious about wealth building. And so I will gift my time. Mostly, I love working with people one-on-one as a mentor, as a financial advocate. I no longer manage money actively, but I take a look over your shoulder at your quarterly or monthly statements. Many of my clients, as I mentioned, already have investment advisors. We take a look at what they're doing on the client's behalf and make sure that they execute what they say they're going to.
Mm-hmm.
I take a look at all of their taxes, what they have in their wills and real documentation. And we just do, as you mentioned, a 50,000-foot view to make sure that they've got all of these responsibilities in place. And so I work with people one-on-one, either for a half year, could be a full year, depending. And then I have classes. If you only want to learn, I have a financial clinic. We have had so much fun. Up till now, it's been only women. And this year, 2025, I'm opening up the gates
Oh, good.
because I've had so many husbands of women saying, I want to take that class, you
Yeah,
know?
good, good.
So
I
I'm
love
opening
that.
it up. It's called the Wealth Builders Express. It's a weekly a group that gets together on Zoom weekly, and we go through what's happening in the markets. What does that mean to you? And give people a chance to learn on a real-time basis
Yeah,
what's happening to the interest rates, what's happening to, these things that are going on. Last year, we studied every part of AI and what impact it was going to make on different industry groups, and we had a lot of fun. So that's available to people. And then going forward, I'm going to be having some additional special master classes for free. And so be aware of that. You can learn all about that at my website, lynnekitchen.com.
excellent. Oh my gosh. Fascinating conversation. You are a star. I am so happy that we got to have you. Oh my gosh, I forgot. Lynn's a client of mine. Lynn,
Yep.
I forgot to mention, Lynn's in our world. I've worked with Lynn for years now. I'm so happy and thankful that we get to have Lynn in our world. But yes, this was an amazing conversation, Lynn. I'm so happy you could come on the show and share all of this today. And
Thank
I,
you.
I think really the core of your message is get in there, like play an active role in your wealth, right? That's really what
Right.
you're saying is get your hands in there, open up your mind, be invested. It matters, right? There's so much impact you can have by investing a little bit of your time and energy to learn. And you're providing both learning opportunities as well as mentorship and guidance opportunities, which I absolutely love. So, Lynn, thank you for coming on the show today. Absolutely awesome stuff.
I so appreciate you, Kelly. And I just want to say one thing. In the interest of all of us wanting to be impact agents, which I know is your theme, Kelly, there's so much reward and opportunity that's waiting for all of us, not only to become great in our businesses, to become great investors, but then guess what? We can become great philanthropists after that.
It. That is it. Yes, that's it. And people don't realize that you need to have the funds to be able to do those amazing things, and having the knowledge and expertise both ways, building your business, investing your money, getting your money working for you. They all work together so that we can make huge impact in the world and make money doing it. So thank you to everyone for tuning into the show today. Make sure you scroll down below the episode and connect with Lynn on next steps. Download the guide. Lynn, thank you so much for being here. And
My
we'll see you
pleasure.
all back here in just a few days.